Welcome back. I am Charles Musgrove, your host of Answers That Count. Thank you for joining us again. This is going to be another great show. You know, all of our shows are fantastic. We have a lot of great information out there on how to run your business and what to look for, what to be cautious about, and opportunities that are available for the small business owner and those that run businesses. So today's going to be no exception. And if you want to go look at some of our other shows, you know we're out there on Answers That Count on YouTube. We also have all your favorite podcast platforms. We're out there on Apple Podcast, iHeartRadio, all of those, Spotify. We're out there on all of those. Look for Answers That Count. Look for Charles Musgrove, and you will see a lot of great information. And today we are joined by Ashley Vannoy. Ashley, thank you for joining the show. Welcome.
Hey, Charles. So good to see you. Glad to be here.
It's going to be a great show. Ashley is, she's over in Miramar Beach, Florida, Destin, Florida, and we're in the home studio back in Tallahassee, Florida. So this is another great opportunity to join North Florida area today. And Ashley is going to be talking about some banking opportunities, some 504, some SBA opportunities. And when when you hear SBA, you probably think of the PPP loans and all the other stuff that has happened with the SBA recently to help the small businesses weather through this COVID crisis and all the stuff that has happened recently. So today we're going to talk about the 504 program, which is really not something that is just happened because of COVID. The 504 program has been around for a long time and has been a financing opportunity through the SBA for many years. Is that right, Ashley?
Yes, it absolutely is right. The SBA 504 program is a way to get a long-term fixed rate in place for an owner-occupied property, somebody that is occupying their building. And it's been around forever, but rates have never been this low. It's just historic. And so what we find, I think, as bankers, I'm a commercial banker here in Destin, Florida, what we find is that the crises like this make partners kind of decide what they want to do with their businesses. So we see a lot of partner buyouts and practice buy-ins and that kind of thing go on during crises like this. And it's nice to have the 504 program out there to make it dirt cheap to be able to do it.
Yeah,
when
it is.
They're ready.
It is a very affordable option right now. So the term on that, is it a 25-year payback period?
Up to 25. You can do 20. You can do 15. Basically, what does, and I should introduce myself fully if that's okay.
Sure, absolutely.
I'm a commercial banker with a community bank, and we partner with community development corporations all over the country. SBA allows, for me, in my role, allows me to do, and First Bank of the Lake allows me to do nationwide commercial lending. So I can do loans anywhere across the nation. It's a really big country, Charles. I'm finding, being a community Northwest Florida girl at heart, I'm just really enjoying being able to help people all across the country. And when we found going through this PPP process, it just really opened up the whole country to become my client base, because the SBA put out that program to begin with. So it was kind of fun.
Absolutely.
But I got into the SBA business really because of that. I wanted to help small businesses, but also what's important about the SBA loan is that the government gives us a percentage of the loan as a guarantee. So it makes the lending rules a little bit less stringent than would be a normal commercial loan that you would walk into a bank and get. A much larger bank or even a smaller one. The SBA, because of that guarantee portion, and it gets to be from 75 to 90% on a 504. Those guarantees are really worth making the borrower have to come up with less criteria,
right?
Less stringent.
No, I think that's good, and that is that's something really that the business owner out there that fits into that box. I think it's something that they really should look at. Are those SBA programs and specifically the 504 program that they can get a long-term payback rate, they can get a low interest rate, and really the requirements to get started are not as stringent as they might be if you went straight traditional loan, commercial loan with a bank. So and like yourself, you work with, and there's many banks out there that work with the CDCs across the United States to do these programs, and it's a partnership between the banks and the SBA. So it's not just strictly an SBA loan; it's a partnership with both. So
Yep.
it takes the banks to be able to make this happen, and it takes the SBA to kind of incentivize the attractiveness to the bank to make that loan.
That's right. And there are some, I think, some businesses right now that are going to be on hiatus for a little bit from different types of businesses that really just aren't profitable for the moment. But having that SBA guarantee in there, I know in our daily life, we're having that post-COVID checklist. We have to go through and double check everything that happened before the virus. And I think most banks are kind of doing that. But if you need one of those, I'm certainly willing to provide it. But I think also going to an SBA lender, preferred lender, I want to specifically address that because it is super important that the bank that you go to have the ability to approve their loans. Some do still have to go to SBA, but the majority of them can be approved right here with that preferred lender status, and that's super important right now. The other thing good about the PPP loans is that you've already got your financials all together. I
That's
know
right.
I'm your greatest fan. I listen to your podcast all the time,
Well,
and
good. Thank you.
you have been slicing and dicing with that PPP program like nobody's business. So if you
Thank you
haven't
for
checked
that
out
endorsement. Yeah, awesome.
Charles's podcast, he just does a tremendous job with helping, and it's changing by the day. That's the thing. It's been, the banking community has been kind of turned on its ear a little bit, but we're through it, and the exciting part is how do we expand next, and what do we do next, and how do we capture those PPP loans and revisit those people and say, hey, what else can we do for you? And that's where I'm coming in right now.
Yeah, I think that's a great opportunity for the banks to really extend that assistance that they did through the PPP loan process. And I will tell you this, and I've seen this firsthand through that COVID crisis and how the banks really stepped up to help the business community get through that. The banks really went above and beyond to process those PPP loans to work with the borrowers to make that happen because a lot of people was really on they're really on edge, and they had an extreme amount of anxiety going through that process. And there's still a lot of businesses that are living through a lot of anxiety with what this COVID is doing to their business. How can they adapt? How can they adjust? Can they survive? Should they even attempt to do that, or has the world changed so much that they need to look at another opportunity? So there's a lot going on. There's a lot that's happened. This is this has been an incredible decade that's happened in the last year. So it's just been it's coming at us at warp speed, and there's going to be a lot more to happen for the balance of the year with the elections that are going to happen in November. I don't think I don't think the excitement and the changes and the opportunities are gonna lessen between now and December. So it's a time, when crisis happens, it's a time to take advantage of that, to see how you need to adjust, pivot, and make the most of it. And we're living through that right now. And I think this is a program that is relevant today, and most likely is going to be relevant for the balance of this year. So we we have a lot to I think we got a lot to talk about in on this show. So there's a lot of details to this. I think will be important for the listener to hear in how to take advantage of this program. What's the box that it fits well for? Are there some additional incentives that are available now if you're funded by, I believe if you're funded by September 30th, you get an additional period where the interest and the loan payments can be deferred or even paid by the SBA. So I think that is really an exciting opportunity for the business owner that fits into to be able to get this refinancing or the financing through the 504 program. It really makes it a lot more exciting right now.
I agree, 100%. It's that CARE Act stuff that's happened. It's actually September the 27th is the date that it has to be funded by, and So we're experiencing record loan growth, as you can imagine right now, because of that, people trying to get into that. But basically I can just kind of give you an overview of how the loans are set up from the 504 program.
Let's do.
On the building loan, you can build in all kinds of things. You can build in equipment and working capital, that kind of thing. So you get that all in price, and you really inject a minimum of 10% down. So that's unheard of.
Right.
Most other commercial loans require more down payment than that. And then the bank does 50% of the remainder, and then the Community Development Corporation gives that long-term fixed rate for the remaining 40%. And right now it's like at 2.5. I mean, really fixed for 20 years and 20 or 25 years, whichever one
Right.
you pick. So it's incredible.
Yeah.
I can't say enough good things about it. And really, on the other part, the other program that we use the most of, I might mention too, is the 7A program too.
Right.
The 7A program is out there for maybe real estate secured, maybe not real estate secured. It's going to be franchises. I mean, I know my bank has all kinds of specialties. I'm in the healthcare one, but I don't necessarily, I can do all different types of businesses, but I happen to be in our healthcare vertical where we do nothing but that all day long and know it well. We have several different other verticals like manufacturing and like acquisitions and development and franchise. We have that, which is incredible. And so those guys and girls, that's what they do all day long. So they can make it very quick and very easy to get through the paperwork. And that's what we do every day, all day. I think really having an army and specializing in SBA is the very best model that I've seen. And I've been in commercial banking 25 years now. So it really, for efficiency's sake right now, you don't want to have to hassle with it or mess with it and have it, messed up later on. If something happens in your business later on, you need to change it. You want it done right on the front end. And First Bank of the Lake definitely has an army for that.
Good. You need to work with the experts. That's for sure. Well, let's leave it at that, and we're going to ask John to play a little bit of music, and he'll do an intro that we use for the recording for the radio show. So some of this information we'll dive deeper into the details of it for the radio show. But with that being said, everybody hold on, sit tight for just a few seconds. John, play us a little bit of music, and we'll get rolling.
Welcome to Answers That Count. If you own a business, you can count on us to give you the answers you need to succeed in all aspects of your business. And now, here's your host, Charles Musgrove.
Welcome back. I am Charles Musgrove and your host of Answers That Count. Thank you so much for joining us. You're in tune for another great show here on Answers That Count. Go check out our other shows. We're on Apple Podcast, iHeartRadio, YouTube. Look for Answers That Count. If you want to email me ideas or suggestions about future shows, do it at cmusgrove@answersthatcount.com. We're out there. Look at our website, answersthatcount.com also. Today, we've got another great show. We're going to talk about SBA financing and funding. We've got a bank expert, not somebody with the SBA, but somebody that works closely with the SBA. She works with an approved SBA lender. So everybody's heard a lot about the SBA lately because they've been in the thick of it with the PPP loans, the EIDL loans. So we're going to look at a different aspect of it now. We're going to look at the 504 program. This is a loan that could be very applicable for your business right now. So they've got some great incentives through the SBA program right now for these 504 programs also. So we're going to hear about that, how you can get the SBA to pay for debt service for about 6 months, I believe. But welcome to Ashley Vannoy. Ashley, thank you so much, and welcome to the show, Answers That Count.
Hey, Charles. Glad to be here.
Great. We're looking for you to provide some answers that count to everyday business. So we know you can do that. We had a great prelude to the show on the pre-show today, so we kind of teed all this up. So if you want to get some information on that, make sure you don't miss it. Go back and check that out on our podcast. So, Ashley, thank you so much for joining us. It's great to see you. You're over there in Destin and Miramar Beach, Florida, right there on Grand Boulevard. So, welcome to the show.
Thank you. Thank you, Charles. Absolutely. I've been a commercial banker here probably about 25 years, but we've had the best time getting to know each other. in our little co-working space. I
Exactly.
work in a Regis over here in Grand Boulevard, and it's been so much fun getting to know. Gosh, there's what 70 other businesses in between my office and your Destin location over here
That's right.
that we've all gotten to know, and we've gotten to know some of them through the SBA 7A program that's out there. It practice acquisitions, startups. I mean, there's some things out there that the SBA offers that traditional commercial lending just doesn't really stack up to. So it's certainly worth the time to put the paperwork together, and that's what we're here to do.
Well, good.
You and me.
Let's do this. Let's give me a little bit of information about the bank that you're with, First Bank Lake.
First Bank of the Lake.
So let's talk about that and what their status is with the SBA. Now they're an SBA approved lender, so that means something beyond just saying that. So that gives you some special priority to work with the SBA and the CDCs across the United States. So give us a little bit of intro about that, and then we'll dive right into the 504 program.
Sure. First Bank of the Lake is a community bank. It's based out of Missouri, and we are doing SBA loans nationwide, all over the country. My bank has got all kinds of different specialties and verticals that we have established, so that if you own a franchise, you want to buy a franchise, we've got a person for that. Or if you want, in my particular one is healthcare. If you want, I can certainly do all types of loans too. We all pinch it for each other. But what it means to be an SBA preferred lender, it just means that we are preferred status. We can sign off on the SBA loans here, but they don't have to be shipped. It saves a lot of time and effort, and the SBA has given that special designation to us. So just really enjoy that. We've got all the bells and whistles from a technology standpoint to be able to get the loans through, and a virtual army of people that are able to package and fund deals and get ground up construction type financing going. I mean, that's unheard of right now because nobody's building anything. But there's all sorts of discounted prices going on in the commercial lending. I mean, in the commercial real estate space out there, and you got to be quick with be ready to go with it. There's deals I've done in the past where you can actually get your SBA loan approved before you ever, with the SBA, before you ever find your property. So that's really forward thinking, in my opinion.
That really is.
Especially with interest rates, with the 504 program being in twos. That's a really exciting thing. I mean, I've got 25 years and I've never seen commercial rates this cheap.
Yeah, I want to make sure people hear that clearly, that you can get long-term financing through the SBA for, it's in the twos, and the term can be 25-year fixed rate in the sub twos. So you can get less than 2.5 right now, and everybody knows that rate fluctuates on a daily basis, but right now it's in the less than 2.5% on an annual rate. That's incredible.
Right, and really on the 7A program too, I did want to mention the other one. I mean, you can extend out equipment financing from 7 to 10 years, and normally equipment financing is like 3 to 5 max. So that really helps you improve your cash flow if you're
absolutely
looking to combine the two and get into a new facility. You know what? I just would love to talk about live deals. I think it's fun to talk about those because we have the most amazing coffee roasting facility here in Destin called Amavita, and they use this one. I use them as an example because it's fun to talk about them, and then it's fun to talk about breweries too. But they're here in Destin, and they were able to get into a beautiful facility in Santa Rosa Beach that are open for tours now that utilize this. And this time last year, they were able to get in with a 90% financing on about a $2 million facility. And it got them literally, they were shipping coffee all over the globe, literally.
That's impressive.
And they were doing it from mini storages.
Wow.
So
they went from mini storages into that.
Really made them go global and take it to a totally different level. And now it's open for tours here in Destin. So I'd highly recommend y'all stop by next time you're over.
Yeah, I would personally endorse Amavita Coffee. Also, I'm a big fan of that. So that is a great brewery, great coffee over there from Destin, Florida. So they were able to do the 504 program a year ago.
That's right. And they were able to get 4.25%. That was really low back then. And now it's like half price. So,
yeah,
I mean, I thought that they were doing great. I love to brag about them because they had the best package put together. Maybe I might want to talk about that, just what's required to get together.
Yeah, dude.
But it's really that's where you come in, Charles, just to make that that package for the lender complete. But we'd be looking for like probably 3 years of tax returns, and tax returns have to be the projections need to be post-COVID too, so they have to be discounted a little bit. So you and I are going to be best buddies before it's all over, because I'm going to be hitting you up for all these
Good.
projections. I'm
Good.
sorry.
So now tell us about how
it is something that's required in the SBA.
Tell us about how that the partnership works between the bank and the SBA, because it's really a threefold investment into that. So you've got the owner, the borrower has to put up money. And yes, this is a lesser amount. A lot of times it can only be 10%. And then you have the bank participating. I believe that's at a specified minimum. And then the SBA fills in the difference.
50 and 40 to be exact. And then the 10% is from the client.
Okay.
That's it.
And then the term of the bank financing, is that also 25 years, or is it a requirement that it has to be a minimum of so many years?
It's a max of 10.
Okay.
But to be able to get a fixed rate for 10 years, even on a commercial property, I mean, you can't really do it without the SBA program, because of that guarantee, because the government is saying, well, hey, bank, we'll give you 75% paid back if for some reason this loan doesn't make it. Say if Amavita, blew up and just went global and didn't really, pay their loan back, well, then the government would pay us back 75% of the loan that we lent. So it really allows for us to think outside the box from a cash flow perspective a little bit easier. Also with equipment, it gets obsolete after a while. So that some of that stretching that amortization out over 10 years, that may be longer than the equipment's going to even last. It
Right.
just depends on what it is. But it is because that SBA guarantee is there, that just makes it a little bit easier for us to get our arms around it.
Yeah, that's a great advantage for the businesses, and it's a great opportunity to do that. And as this COVID crisis has hit a lot of businesses, cash flow is even more important, and the sensitivity of cash flow. So this is a place where they can squeeze more out of the same revenue dollars to make it longer and to maintain profitability for a longer period of time.
Absolutely. And there's, when we talk about projections and business plan and things like that, a lot of people kind of tighten up because they can't stop what they're doing and, unplug for their business to write a business plan, especially if they've been in business for a long time. They don't think they need one. But the advantages to getting this financing in place, and the fact that you have experts like you and me to hold their hand on what the paperwork looks like and what the questionnaire looks like. Really, the business plan form is not hard. It's just time consuming. Just
Right.
kind of like the PPP. It's not hard. It's just time consuming.
Right. You have to have
so
the right
experts like you need to hold their hands and make sure they get all the blanks filled in so we can get that loan submitted. Turnaround times, probably it runs about 60 days from start to finish, so maybe a little bit longer. But a lot of that is it's up to the borrower to have their packages put together, on the front end, so that we're not going back and forth quite a bit.
Right. Go through the process of how the SBA part is funded, how the bank may pre-fund, and then when the SBA funds, it clears out what the bank has done. So that's a little unusual, and unless you've gone through a 504 or probably any SBA funding, you wouldn't. Even if you have gone through it, unless you do it on a regular basis, you forget how that works.
That's right. It's almost supposed to be seamless, but you actually do get to see it. It's when that debenture comes in, when the SBA the bank funds their portion first, and then the SBA debenture comes in at a later time, which is usually like 60 to 90 days after you close, and takes over that portion from the CDC. But essentially, that's how they're getting, this is kind of technical, but that's how they're getting that low interest rate, is because they're selling these bonds, essentially. And so the SBA 504 program, in my opinion, is something that you want to think about for something you're not going to want to leave for a long time because the interest rate is so great and
Right.
so advantageous. But if you were looking at doing something that you may want to sell within 5 or 6 years, then the 7A program is a lot more flexible. It's just simply because you don't. If you're going into say you're a leased space, say you're a franchise, or in my case a dental practice or something like that, because I do mainly healthcare. They're going into lease spaces. So one of the problems is they've got really for collateral is equipment.
Right.
You and I have had clients like that. And that's where the 7A program can really come in and say, all right, let's get your all in and let's have you put, your 15% cash injection of the total of everything that it's going to cost, from signage to working capital to everything, from 90 days of lease expense, all of those kinds of things, and figure that all in thing and get a 15% down payment, and then we'll figure out what the prime is so cheap right now too. So it'll be the interest rate usually ends up being a function of prime, like prime
Right.
+2.
What is the 504 program is so attractive right now? Is there let's say you get into that and some event happens that you now have to sell that property. Is there a prepayment penalty?
Yes, there is. And that's what I was saying. It is, they don't want to have to sell those bonds early. I mean, it really is something, the prepayment penalty is in there. So you have to know that going in. But on the flip side of that is, you may be able to qualify for a lot more because your rate's so small,
Right.
compared to if I were doing a traditional commercial loan right now, rates would probably be in the 5.5 to 6s for something like that. And if you could even get a long-term fixed rate, normally 5-year balloons are what you see out there on the traditional commercial side.
Right. What does that prepayment penalty look like? And is it over a 10-year period, or if, let's say you do a 25-year term, is the prepayment penalty, does it expire totally after 10 years, or what is the term that prepayment penalty lasts?
There's so many different programs out there, but the prepayment penalty usually is 3 to 5 years after you close, and then it goes away.
Okay.
And it's a percentage of what's left.
Okay, so that does, after 5 years or some period of time, that does go. It doesn't last the entire length of the loan.
That's right.
Good. So give us, and this is kind of ballparkish, but well, before we go into that, tell us what the incentives are right now that the SBA is offering as far as deferment of when payments are made. And then I hear there's also where the SBA is actually paying the debt service for a period of time on these 504 programs.
You know what? On the 504 program, I've only really heard of this 6 months of payments for September 27th. That's the one we're trying to get. We're trying to get all the money
Right.
out the door, everything funded by September 27th, so they can get their 6 months of free.
Okay, so
but you never know. This Main Street program is coming out too, and we're just waiting to hear from that. I don't know if you've heard any buzz about that, but it is. It's not an SBA loan. It's a traditional commercial loan that the federal government's coming out with. It we don't have guidelines on it yet. But,
right, yep.
We're going to stay in our sandbox here with the SBA.
They've been talking about that Main Street loan. So back to the 6 months. So if you're funded by the September 27th date, then so the SBA is going to pay the debt service for 6 months. Are they paying it for both the bank part and the SBA part, or just the SBA part?
No, it's both. It's both of them, and it is really, golly, I can't encourage people enough because you're getting kind of close. I mean, I was looking at my computer to look at the date. It's June 30th now, and
Right.
usually, getting that funded by September 27th is going to be tight if you don't have all your act and your ducks in a row.
Right. So
there's obviously there's checklists for everything, and I know you've got them too. Just look that up and see if you can get your package together and get it in there. Even if you can get the guarantee piece done by the SBA portion, I just think it's worth it, man, especially in those larger loan amounts,
Absolutely. If you can get for 6 months, and they're paying both the bank part and the SBA part, that's critical. Now, I do know that with that September 27th sounds like a long way off. However, really, you're getting close probably in the middle of July you're probably getting almost too late once it becomes the end of July to get your package in, because you've got to get it approved by the SBA. And then there's just a whole lot of stuff that needs to happen that takes time to do that. Is that correct? We're looking middle of July to the latter part of July. You're really getting close to the end if you don't
And you
have your
can
package
tell
in.
too. You can tell we've just gotten really popular,
Right.
really popular. I also wanted to mention too. I don't know if we were finished with that thought, but there are so many other pots of money out there too. One of the things I like to do on the commercial lending side is to know. With the Okaloosa Economic Development Council here, they've got one. Gosh, Gulf Power has one. There's so many different pots of money for incentives, like Triumph Gulf Coast is another one that's out there that we can partner with. If you get a community banker that knows the right people that are entrenched in the community, like you and I are, we know city managers, we know public leaders that can lead us to different incentives that you can build in with this. So if the 10% down just doesn't seem doable right now because of obviously all the cash flow issue, then there's pots of money out there that we can find to assist you with down payment, to assist you with closing costs, all that kind of thing.
Yeah,
So
that's
I
good to
highly
mention.
recommend.
Yeah,
Yeah,
that 10% is an important number if it's a new startup or if it's a new build out. If it's an existing business and they're looking at refis, then most of the time that 10% is going to be in the equity they've already accumulated in their building or their business. So they should be good with that. But you're correct that community bankers, I think they're really able to do the extra work. They're really able to partner with those other incentive programs and really do the, if you will, the dirty work or the hands-on work to help the businesses succeed in getting that loan and helping them get the best financing that's out there, and take advantage of those other pots of money too. Like you said, that
right.
people don't. There's so many pots of money that's out there right now that people it's hard to know that. It's hard to know what's out there. So it really takes a banker, a community banker that's in tune with the available cash that's available to help those businesses.
Right. And really knowing the area too. I think in my case, just being able to see, calling city managers to say, hey, how can we deed this into this part of the city so that they get a 10% higher incentive and waive their taxes, their property taxes for 10 years. Or, I mean, using examples like that, it is so much of an economic impact when one of these deals gets done. And to be able to quantify that, especially, in the form of, LinkedIn posts all the way, but, seeing those jobs actually come to the area because of what we've done. But then also, sometimes when they're qualifying, we look for a debt service coverage ratio of about 1.25%. That's meaning that their cash flow has to cover that debt 1.25 times. And if you're going into a $2 million building and you're getting a 10-year tax abatement, that's going to make a couple of digits in the debt service coverage ratio if you just fill out another set of paperwork for the incentive,
Yeah,
that's out there. And that's
absolutely.
happened before to me. So it's been fun.
Yeah, that's a big deal to be able to do that, and really there's. I'm glad you brought that up because there's definitely a partnership with those communities, with those municipalities to make sure those businesses are successful because that's the tax rate, that's the jobs for people to work at for years to come. We're talking about a 25-year term for debt or for a loan. Well, that means that business is going to be there for 25 years, providing jobs, providing a healthier community, providing a good workplace, a good environment for people to go to and work and live. So that's important. That's why it all works together.
Especially now.
Especially now. So we have I failed to mention, which we've been doing this on other shows. I failed to mention the day and the time that we're doing this show because with this COVID crisis, so much has happened so rapidly that it's when you view this or you watch it in the future, there's no telling what's going to happen from the time we record this to when people are actually watching it. So today is June 30th, 2020, and it's about 3:30 p.m. Eastern time right now. I'm probably a little off on the exact time, but that gives you some reference point to when you're watching this or listening to it in the future to know when we recorded this, because who knows what's going to happen between now when we record it and when you watch it. So this has been a crazy year, and when we started doing the shows, it wasn't a big deal to say the day and the time that we're doing the recording because things didn't happen so rapidly. But this year is the exception, and goodness, I hope it. I don't know if we're going to go back to normal or whatever we called normal before, but goodness, I hope things slow down enough that they're not coming at us that fast. I mean, it has made the adaptation and the pivot part of our job and what we do on a daily basis just crazy. It's really stretched our capability to change, right? It's really stressed. Okay, you've got to be able to change. You've got to understand your environment. You've got to set up your business. You got to be able to do things in a different way to deliver good service and what people are looking for on a kind of a new delivery method.
Absolutely.
My guess is that has affected not only the bank employees, but the customers that you deal with on a daily basis.
Absolutely. Yes, definitely. Security, getting information back and forth. Oh my gosh, it's never been more difficult now.
Right.
We always send secure links out to everybody to get their information, but it's scary to think about what kind of fraud is going on out there. I mean, and even fraud, in the PPP world, my goodness, man, we've had a lot of it here at the bank. You'd be really surprised.
Yep, it is. We're in different time now, and Ashley, we are coming to the end of the show. Is there anything else that you would like for our listeners to know about what they need to take advantage of to make their business better, to help their cash flow?
Absolutely. Well, thank you so much for having me on today. I mean, it's just a great thing to bring awareness to. Don't be nervous about getting the paperwork together. And when you see SBA, don't freak out.
All right, don't freak out.
It's a good thing. They're experts that will make it a lot easier for you to get where you need to go, and just give us a call.
Now, when
Thank you for having me.
when you do this, I want you to when you process these loans, do you take the lead instead of the CDC? Is the CDC in your part just an invisible partner in this?
Oh man, it's back and forth. It really is in the 504 space, but the 7A is really me.
Okay.
Gathering all the information together, and then we have, like I said, an army of people that help us get all the boxes checked correctly, so it is a perfect fit when it goes and is submitted for that guarantee.
All right, perfect.
So it just takes a little bit more staff than normally would on a commercial loan, but we've got it.
Good. So you've got
and
that.
The expertise is here.
We will put your contact information in our show description, and check us out there. Thank you so much, Ashley. You have brought some great answers to the questions that we have. You brought the answers that count on our show. So thank you so much for joining us today. Thank you for joining us. Look for us every week. Go check us out on YouTube, Apple Podcast, all the other podcast platforms that you listen to. I am your host, Charles Musgrove. Have a great week. Have a blessed day. Peace.
Answers That Count is brought to you by the Bean Team. For all your business accounting needs, visit beanteam.com for more info. You can listen to more episodes of Answers That Count on YouTube, Spotify, Apple Podcasts, and iHeartRadio, or visit AnswersThatCount.com.